Yo, what's up everybody? So today I'm going to be doing my weekly analysis for all my pairs that I trade. So I've got NQ, ES, dollar index and the bond market. So without further ado, let's get into it. So here I've got NQ, this is the weekly chart and this is the continuous contract. So it's not the current one that's being traded. And that is because you can't see as far back in the one that's being traded right now. So the continuous contract, there's this weekly fair value gap, SIBI, that we've been trading into for the past 2 weeks, which was actually one of my objectives for the upside while we were working up through this price run here. So now you can see we've hit it and we've kind of had this reaction here, and I'm watching that down to the lower time frames as well as this fair value gap here slash BSC that I want to see worked into coming into the next week. So if we go down to the daily chart, here we have what we're working with, and one of my big things that I've seen now is that we've traded through this BSC, so this fair value gap that would have acted as support to pull us higher has been traded through and closed below after a trade into this higher time frame level. So what I'm looking at now is, will this now continue to support price lower coming into the next week, and will we take out the previous week's low before we take out the previous week's high, and are we going to trade lower or are we going to trade higher after what we've seen here? So here is the fair value gap slash BSC on the weekly, which I showed before, and watching a trade into there, which is also the previous day's low and the previous week's low. One thing to note for me and for anyone else looking at it is that the whole weekly range has been created through Thursdays and Fridays trading this week. That was also because it was the week after Christmas, so Monday there was no trading, the markets were shut. But yeah, that's all we've got on the daily chart. There's an order block here which I haven't marked out because it's just the high of this fair value gap slash BSC, so don't need to do that. Now on the hourly chart, what's happened is, this is just a zoom in from what's there. These things here, that's the midnight open for New York, which is there. And then those are two overlapping new day opening gaps, so they're just kind of scruffled up and there's like a bunch of text that you can't see properly there. But as we can see, this is the previous week high, previous day and week's low, previous daily high here that traded up into the new day opening gap, make the high of the day in London, continuation New York. It's bread and butter, isn't it? So down here, this is the daily order block mean threshold that I had on the previous slide. And looking closer here, this is the daily inversion fair value gap slash BSC that I sort of traded through on Friday. And now what I've seen here on the hourly is that we've come up and treated it as resistance already. And this is before even going to the next week. And you can, one of the big signs for me is when this happens. You see here where these bodies just closed exactly at the low of this inefficiency. That shows me that it's very likely, very high probability that we're going to respect this area and continue lower. So here's a fair value gap slash BSC, which I'm expecting to be treated as inversion, and then that 60-minute order block there, which is gonna also, I believe, propel price lower. Now here's one of the things that has got me a bit confused, but if it weren't for the thing that I'm going to show in a minute, this is a big confluence that we're going to push price lower. So you see here, this is the NQH2024 on barchart.com, which gives me the commitment of traders data, which is basically the net long and short positions of the big institutions and the big traders, as they have to be released in certain intervals. And as you can see recently here, just a couple of days ago, they're heavily short. And when I'm seeing these things on the lower time frames, like discount arrays being disrespected and premium arrays being respected, and stuff like the inversion fair value gap, that fair value gap not being treated as support but being broken and treated as resistance, and then seeing stuff like this, that's a big confluence that we're going to see lower prices printed. So moving on, this is ES. Here what we've seen is this weekly breaker that we've moved into within the past 3 weeks, and also this old high here that got treated as a stop run. As we can see over here, it pierced it and then we went lower. Then we have this high being used again, pierced, and to see if we're going to react off of that level. Cool, that's the weekly. Then down to the daily on ES. So here we have the daily range, which I've marked out. So that's the gradient, so that's 25%, 50% and 75%. of this daily range, and that will be more relevant when we go into the lower time frames. But from here there's no fair value gap here like there was on NQ, but the previous week's high, previous week's low, again made in the last 2 days of the week where the real expansion took place to the downside. See this high here, also the previous week high, traded through and then rejected. See, we failed to displace above this high. That's another thing that shows me that we're weak bullish right now. Okay, and then this daily order block, mean threshold, same as on NQ. So we're on the 60-minute chart, and this is a 75% gradient of the daily range area. You see how we're respecting this. So you're treating it as a point of resistance even before the range has been created, and then we push lower, and then we use it as an area that is treating resistance. And this is the daily order block which was on the daily chart here, transposed here, acts as resistance, fair value gap there. Haven't marked it out because it's just pretty obvious for me. Sorry if you guys can't see that, but here, so this again, it's the same thing as on NQ. I want to see this gap here to be treated as inversion, and then the order block here to support price lower. Same thing here where it's kind of muddled up because there's just a bunch of stuff in one area. Alright, so here's the thing that is confusing me. It's just me saying it, it's not me like asking for help, but if you know anything about this, drop a comment and let me know. So here you can see on the commitment of traders that the big institutions and big traders are heavily long right now, which is just conflicting with what's happening in NQ, because on NQ traders are heavily short, and these pairs move together. As you can see, if you look at the difference between this right here, we look at that, and then go up to NQ on that, they're pretty much the same. They move in the same direction together most of the time. Alright, so now let's look at the dollar. What we have here is the weekly chart, and I'm just marking out this fair value gap, which has been respected. Earlier in the week when it was traded through, I had thought that we might not see it respected because it was traded really far below, but we pulled back at the end of the week and are now closing inside of that range. And then this weekly bullish order block, the mean threshold, respected there along with the fair value gap, and this is just an objective if we come up to the upside because it's the first inefficiency that we have. So here's the daily chart for the dollar. Pretty much the same thing, levels transposed, that's the BISI, weekly BISI, and here's the daily fair value gap slash BISI that I have marked out. It's over on the other left side of the chart. And then this is fair value gap slash SIBI, and we're working in the range of it now. I want to see during Tuesday and forwards trading after the new year if we're going to treat this as resistance or we're going to use it as support to push price higher if we close outside the range. This is just an old inversion fair value gap that we saw traded up and then down through and support again. Hourly chart, here we have this is the daily BISI. We've seen it reject over here. The new day opening gap on the 28th has supported price up here, then this order block and this BISI has supported price over the past day higher. Although we've been in consolidation, we've closed higher inside the range of this SIBI. Alright, now let's look at the bond market. So this is the 30-year Treasury note, and we're looking at this weekly SIBI. As you can see, we've traded through it almost to the high but didn't quite get there, and we've aggressively closed outside of the range because there's no body in this range. We've only left wick up there, so it's completely inefficient still because there's been no close of the body. And then this weekly bearish order block we have touched and closed below, which is a nice sign for me that we could print lower prices. And then here is just an objective on the downside to see lower prices, which is the weekly BISI. Then everything levels transposed down to the daily chart. Then we have this BISI here that we're currently trading in and we've rejected, but I'm looking to see price close outside of that and come lower from here on a retracement. And this is part of the 20-day look back, sell side liquidity below this previous daily low. That's it. And then here on the hourly, we've seen this week trade up through into that weekly fair value gap slash SIBI, and then we've seen the latter portion of the week trade down. Here there's an SMT with the other two bonds. We've got the 10-year and the 5-year on one of them, I can't remember which one, but I had a look. One of them has posted a higher high here. So this is Bond SMT, and this here is the daily BISI. We've seen it react here, but then come back and react off the weekly one, the weekly SIBI again. And then this is here a fair value gap / SIBI on the 60-minute that I'm watching to see if we support price lower. Yeah, and that's the end of my weekly analysis. I hope you people enjoyed it. Subscribe for more, and leave a comment if you enjoyed it. Thanks.